What's good, everybody? It's Jonah. Come back at you on another video. So for this video, I'm going to do the trade recap for Wednesday, July 22nd, 2026. So as you can see on the bottom right, the session just ended because it's already past 11, so the session just wrapped up. And it's been a quite interesting 24, 48 hours to say the least because I'm effectively on a losing streak. Um, if you watched yesterday's trading recap, essentially I took a mitigated loss. I took two losses, right? Because usually my first entry is full risk, and then the second entry is half of my full risk if price presents like another entry. Um, but because I took partials on the first entry, it totaled to about a normal, like one normal loss, even though I technically took two losses. Now on this trading day, I took two losses again, and I was not able to take partials for either. So it was, I guess you could say, frustrating to say the least. Well, I'll call it an interesting day, because you guys are going to see the events that unfolded in order for that to happen. So here we are, Wednesday, July 22nd. So if we look at the calendar, right, we see no news. So I'll basically behind the charts. I'll be behind the charts for the rest of the week as well. So jumping right in, right on the 1 hour time frame, we look for the higher time frame buys. So if we look at what took place yesterday, right, you see a low here and then an aggressive push up, right? Same idea, right? Lows were made and then a push up. So at first glance, it might seem like price was bullish. However, then you're beginning to see price start breaking itself down, right, for both pairs. And then if we look at the S&P, right, this is the highest high. Prior to this highest high, these were the lows that remain, you know, no, like price was not able to trade under it. So S&P appears to be bullish. However, with the NAS, right, you're seeing that this was the highest high that was formed that was created by this lowest low, and then this low gets traded through with these candles right here, to the downside, right? And then you can also see that there's also a fair value gap that was formed, which price traded in through and appears to have been respecting it since it's been rejecting it, right? The same idea with the S&P, right? You see S&P, even though it did not break structure to the downside here, you still see a lot of aggressive bearish momentum. You see a bearish value gap, and it was respected with these wicks, and price is now making its way down. So because on the NAS, right, this was the most recent structure break prior to 8:30, I basically approached the day with a bearish bias, right? So jumping into the 15-minute time frame, right, we'll skip a few candles. So now we want to find 8:30. So this candle here is the 8:15 to 8:30, and then if we look to the left, we'll try to find the most recent swing high prior to 8:30, so you can mark as our buy side liquidity. So we have that liquidity marked here, right? Buy side liquidity. The same idea with the NAS, right? It's the 8:15 to 8:30. We look to the left, this high up here, so this is our buy side liquidity. So now it's a matter of marking our targets. So the most obvious targets would be, well, right here for the S&P, right? This is the low, because if we're bearish, right, then we're expecting price to continue traveling lower, right? So this a point right here, this is the low of the session, and then of course you have this low down here, which is a London low. So if you wanted to, you could just keep this wick as the lowest point, right? And then for the NAS, we have this low down here, which is the low of session. So now we can look to the left, and at least with the S&P, you see another achievable target. I know guaranteed that it'll make it all the way down here, but this you can probably, if price presents us with opportunity, you could probably swing it to this level, right? So that's effectively what I'm looking at for both of these pairs, right? So now jumping into the 1 minute time frame, this is where price is at. Now, price is sort of at an interesting point because right now it's 8:45. Price at an interesting point because we need price to head up to here, right? Because this is our buy side liquidity. We need price to head up into that level because that is our point of interest. We are not going to do anything with price unless price trades through this level. So then we can take an entry and then take price lower, right? The same idea with the NAS. We want price to make its way above here, clear this liquidity down here, and then make its way down. So that is the general idea with price. So now we're just watching price unfold, and as you can see with the S&P, right, price, this push lower cleared these lows down here, right? However, the reason why I'm not concerned is because it's not 930 yet. So all this means is that if price push down and clear these lows right here, then all that means is that this level down here, I would basically be looking at it as the new targets, right, for sell side liquidity, right? And as you can see, this low right here is really close to these lows. So this would effectively make a massive sell side liquidity pool, right? Because these are almost equal lows. So the same idea if we look at NAS, right? These are the lows we had as the session lows. However, we're bearish, so I don't mind price going down and making new lows, right? I absolutely don't mind this because all that means is that this low down here will in fact be the new low that we'll target as our actual target, right? So this is why I'm not too concerned when that happens. What's most important is what happens after 9:30, right? Because that's where we get the main pieces of information, right? So as you can see, price right now it's 9:30. Okay, this bullish candle right here, the last candle that was formed, this is the 9:30 push. So as you can see, the 9:30 candle went up and tapped into and cleared the buy side liquidity. However, with the NAS, price has yet to make its way up, right? You see this push happens here, but it's still a ways away from reaching this level. So right now, my attention is pretty much on the S&P, right? That's where most of my focus is at. So then we're just watching price to see, right? So you got the S&P, it pushed deeper into liquidity and now it's forming a bearish candle. So now I'm watching to see if it's going to give us a bearish fair value gap so that we could take it lower. Right, as far as the S&P, I mean, sorry, as far as the NAS still never reached the buy side liquidity, so there's nothing for me to do with the NAS until it reaches that level. And so then we're just watching it one candle at a time. All right, you're seeing some consolidation happening. Once again, remember NAS is still not up here, so I'm not interested in engaging with price. And you can see with the S&P price is consolidating. So we're just watching price to see if it is going to leave us any sort of fair value gap. So now, if we look back at the NAS, right, you're seeing NAS finally reached our point of interest. It tapped into the buy side liquidity and it's clearing it. So now I'm also watching both pairs to see if either of the two pairs are going to give me a bearish fair value gap to take price lower. Right, you're seeing price push up deeper, right, for both pairs. And then now, boom, you're seeing with the NAS, right? The S&P gave us a bearish candle, but no bearish fair value gap. For the NAS100, you're seeing a fair value gap left. Now, there's some people who make the case that will say, you know, that ideally you want to see a break in structure. And I understand the desire to want to see a break in structure. And, you know, having a breaking structure does add another added confirmation. It's just the one thing like that I also consider is like at least looking back for many weeks and months of price, I've noticed that in a lot of cases price does in fact respect the get. Like if price, you know, truly wants to go lower, right, then that's when the machine that moves price will in fact move price lower. And if it wants to move price lower, it'll respect these gaps, and it'll respect these gaps even before, you know, there's any sort of structure break. That's one. And two, the markets are fractal, and you know, I only have my lowest time frame that I have on these charts is up to the minute time frame. I don't have a seconds time frame. And so it is also very possible that on the seconds time frame, like the 15 seconds, 30 seconds, it is possible that there could have been a break of structure leading into this fair value gap. But there's no way for me to tell, right? Because I don't have that. However, because price went up above, you know, sorry, because price went above buy side liquidity and has now left a bearish fair value gap, right? I'm now looking at this as my entry, right? Stop loss above the high, and then we're planning to target these lows, right? So this is what I looked at for my first entry. Now, of course, S&P didn't leave us a gap or an entry, and usually these pairs move in tandem. And so normally, if price does in fact want to move in the given direction, right, usually you'll see it reflected on both pairs. However, it only showed it on the NAS, so I still went in to take an entry on the NAS. And as you can see, right, price did in fact tap into the gap, and it seems to have been respecting it twice. However, as you can imagine, price immediately takes me out for a loss, right? So It's okay, not the end of the world, because that's why usually on trading days we allow ourselves two entries, right? We'll enter the first entry. If there's a clear gap, like in this case it's clear, like you won't miss this looking at the charts, right? If price leaves a clear gap, then I would normally enter at full risk. However, if it's like a really tiny gap, like say the gap is like tiny like this or whatever, right, or on the smaller side, then I would do half risk just because it's a smaller gap, right? Usually the bigger the gap, the more likely price is to in fact respect it. So price didn't respect the gap, respect it for maybe two candles before blasting through. So I'm already down one loss for the day. Now, if price were to give me another re-entry, then I would take it at half risk. So now we're just watching price to see what happens, right? We're seeing price go higher and higher, but this we're expecting these push higher to be pushes to clear liquidity so that it can in fact go lower, right? We're not looking at this move thinking that price is bullish because on a higher time frame, right, we have confirmation from the NAS that price is in fact bearish, right? So we're approaching this day with the bearish bias. So even though I lost the first trade, I still maintain my bias for the trading session. And then we're just watching price, and right, price still hasn't given us a gap. Right, we sometimes check other time frames like 1 minute, 2 minute, 3 minutes, just see if there's any sort of gaps that were left. Right, so we're still watching price, and now at this point, right, you're seeing, at least right now, there's space that's left, and you're seeing some bearish momentum. So to me, this is a good sign, right? I'm already, you know, on high alert that a trade might present itself. And then we fast forward again, we're now seeing bearish fair value gap that's formed, right? Bearish fair value gap here, and then you're also seeing a clear bearish fair value gap for the NAS. So at this point, this is when I put my position, right, for the NAS, stop loss above the high, right, because you have clear fair value gap right here, and then planning to take price all the way down here. So, this is what I'm looking at for my opportunity. And then this point right here, this is the first low that I'm looking at to take a partial, right? Then you have lows here to take partials, additional partials. Then you have fair value gap here to take it. Then you have, smaller fair value gaps like over here, right? You have smaller lows, right? So another low right here, right? So you have potential opportunities to take, partials. And the same idea with the S&P, right? You have a low here, you have lows down here, you have fair value gap here, right? You have another gap there, have a low here, right? And so you have opportunities to take price lower. So if I skip it one more candle, now this is the only gap that you're seeing for the NAS. For the S&P, you're seeing two gaps. You're seeing a gap here, and then you're also seeing a gap here, right? So the reason why I took the trade on NAS is because NAS tapped into the gap first, right? You see price tapped me into the gap here. Now for the S&P, it tapped into this gap over here, and price was not able to reach this gap here. So I was in the trade on the right side for the NAS, but I'll just show you what happens with both pairs, right? So you can see why this is a rather interesting day. So price taps us in, and then as you can see, price begins moving in our favor. So with the S&P, right, price tap this gap, and then you see price is now moving there, right? So you can see, you watch it fast forward, right? I enter into some drawdown right here, right? Price came and tapped into the fair value multiple times, experienced some drawdown, right? And the S&P is beginning to take off, right? Because it's moving lower and lower. So as I fast forward a little more, right, you're seeing there more drawdown, right? Price continues to tap this for value gap, while S&P, right, the entry would have been up here, and then you're seeing price begin to take off. So I'll just put a short position just so you can see what that would look like. So if I were to take a trade on the S&P, I would have looked to take the trade on the higher gap, right? But price didn't reach that. So this basically would have been the position that I would have been looking at to take partial. So had I been in the trade for the S&P, right, partials would have been taken at this low already, and then I would have looked to take partials around this low. Whereas like with the NAS, right, we've kind of been in consolidation, right? No action has really been happening. Then you see there begins to be another push, right? With the S&P, you see another push lower, clears those lows, while the NAS is struggling to even reach my first partial. So basically, let me put these purple rays. These are like the different targets that I had for the trade with the NAS, right? Like you're seeing, I had multiple different targets, and I also had like additional, targets for these like fair value gaps. Excuse me, for these fair value gaps going down, right? Like I had all these targets on the way down, and the S&P, of course, you had targets here, had targets here, here, right? So you're seeing how you would manage this position on its way down. Now, at this point, we've reached 1048. So this was a point where I was a bit conflicted because, you know, normally I would want to roll my stop loss by the end of the session by 11. So the two options is, you want to give your trade room to breathe because you don't want to move your stop loss so quick, because sometimes you move your stop loss quick, right? You would have gotten stopped out at break even. So for example, with my previous rules, um, it would have been that price needed to break this low and close under this low, which it did with this candle. So at this point, I would have rolled my stop loss to break even, and clearly I would have been stopped out at break even, right? And so it wouldn't have been a loss, right? It would have been break even. However, it would have prevented, if a larger move were to happen lower, it would have prevented that from happening because I would have, been stopped out at break even. So I give my trade room to breathe, right? Because look how many times price taps into the fair value gap. Now at this point, it's 1048. Now normally the two options that you can do is like you want to roll your stop loss to break even either when a larger move was taken out, like a large, in this case we're bearish, right? So a larger swing was taken out, or um, when price gets close to the end of the session, because then at that point, right, you don't want to stay behind the computer for more than you need to be, right? We want to trade so that it can allow us to earn income and benefit our lives, not for us to be chained to our computer, right? So it's 1048, and I know its price was getting closer. So now I left my position open because even though you can make the case that this was a larger move because, these were some lows that kind of, price hovered around these lows from 1015 to 1041. So price hovered on these lows for 25 minutes before finally closing under, right? One could argue that at that point I should have rolled my stop loss. However, to me, I seen this one as the larger low, because if price went on these lows, right, because you're seeing these are pretty much equal lows, right? So there's some liquidity here. And if price went under these lows, price would have most likely also cleared this level here. And I didn't want to make an impulsive move, like an impulsive move in my stop loss to break even, because I already taken a loss. So it goes both ways, right? It's like, because you're taking a loss, you want to probably play a little more careful, right? So you don't compound the loss. However, I didn't want the loss to affect me, right? I still wanted to follow my plan. And because I've seen several times that, price, if you move your stop loss before 11, right, then you can be stopped out prematurely before like the actual move happens. So I didn't want to allow the previous loss to affect me and affect how I operate. So I basically left my stop loss still at this high over here, because I'm anticipating that this is the high of the session and that price will want to end up going lower. And so I was telling myself, okay, once price pushes under this level, then I'll roll my stop loss to break even, and I'm okay with that even after 11 o'clock. But unfortunately, right, you can see price consolidated, and then at this point, right, this is when price got to like 1058. So then at this point I'm thinking, do I roll my stop loss because almost at 11, or do I just wait for price to go under these lows? And so I just decided, you know what, I'll just accept whatever happens, wanting to wait for price to go under these lows, because then I believe these would have been like the 15-minute lows. Um, and then I would have been fine with that, especially because they're equal lows. So I'm expecting price to eventually go under. It doesn't, right? Price takes me back and ultimately hits me out for a loss. So that's basically the recap on the day. Now, it is a bit frustrating because, even though price didn't hit the entry for the S&P, there was a fair value gap that was tapped in for the S&P, and then after that tap, you can see price went down, and price did hit the target here and a target here, and also the fair value gap target there, right? And you can see it just seems like after the tap, price began moving in our favor, right? And it was not so much with the NAS, right? The NAS, it gave us the entry that we were looking for, but price pretty much consolidated, right? Like all of this was just consolidation, and then price never even made it to the first achievable target before reversing on me. So both losses that I took one loss today, the earlier loss over here. This was like a normal risk loss, and this one was half risk. So this is right like a lesson for you guys that what you need to understand and remember about trading is that trading is going to be a random distribution of wins and losses. Like you need to remember that first and foremost that the market is controlled, is 100% controlled. It is moved by an algorithm. It is a machine that moves price. And what you need to also remember is that there's going to be a random distribution of wins and losses. So this setup pretty much gave us everything that we're looking for, right? Price came, cleared the buy side liquidity, then you see a break lower, you're seeing the fair value gap, and you enter at the fair value gap, and you're expecting price to want to go lower because of all of the reasons for price to want to go lower. But in this case, price just didn't want to do it. Now, that doesn't mean that there's something wrong with the strategy. That doesn't mean that the strategy is broken, because what you need to remember about trading is that your strategy is intended to give you an edge in the market. And ideally, if your strategy is rooted in sound logic, it is going to give you a superior edge in the market. Now, having a strong edge in the market, that's all you can really ask for and hope for, right? Because the edge is what's ultimately going to make you successful in this market. Ideally, having your edge is what should allow you to trade on the right side of the market, right? Trading in alignment with higher time frame buys, and ideally being able to ride the wave and to reach your targets. And if you trade correctly, right, then even if you don't have the best win rate, you can still be a profitable trader, because if let's just say this trade played out all the way to the T, right, this would have been a big win, right? Because you know your losses are gonna ideally be like one risk to reward or half or whatever, but like if you get a big win, right, like this one win right here could make up all the losses, right? It just takes one trade, one good trade, one big winner to make up your losses. So that's why one, you shouldn't be discouraged, and two, if you have a strategy that you know repeats in the market, then have confidence with that strategy and operate with that strategy, and trust that even if you get to points where you're experiencing losing streak, right, where it just seems like you can't catch a break, just know your strategy is what's going to allow you to succeed in this marketplace, right? These losing streaks for most traders are inevitable to happen, right? Because there's going to be times where you expect price to do something and it's not going to do it because price wants to reverse or wants to break structure or wants to do that stuff, right? That's going to happen. Losses are going to happen, and there's going to be some days where if you have a strategy where you're allowed 2 entries in a day, going to be days where you're going to take those 2 losses, or in this case there might be days where you take back-to-back losses, right? That might happen, but just know that if you have a strategy and your strategy works and you follow proper risk management, then it's what's going to allow you to remain in the game, right? And that's what you want to be able to last in this industry, because losses are inevitable. So you want to try to minimize your losses and you know pretty much manage risk. That's the point of trading, right? The trading, it's a game about managing risk. And so for me, even though I took losses and I took, you know, several losses these past 2 days, right? I'm still happy because I'm following my system, I'm following my plan, and I'm doing what I can to manage risk, right? Had I entered this position with the same amount of risk or even double my risk, I would have been in a much worse position, right? And the other thing that also I can make peace with is the fact that I feel like for the last 2 days, I also traded I guess I was quote unquote unlucky with the pair that I chose to trade, because, you know, now I probably still wouldn't have entered the S&P because I would have looked to take an entry here. However, had I taken an entry right there, right then, I would have had a partial here and partials here and partials here. And so if price were to reverse against me, right, it would have been a reduced loss because I would have had less risk open, and my profit would have went against whatever remaining loss I would have taken, right? And that's kind of like what also would happen yesterday had I traded the NAS instead of the S&P, right? So it's kind of been, I guess, an unfortunate past 2 days. But it's okay, that's trading. It's like you don't want to bring your emotions into the charts, excuse me, because when you begin trading emotionally, that is when you begin making mistakes and making the wrong decision. So has like the human side of me, has it been frustrating? Yes, of course, because you want to enter trade and you want to win, you want to succeed, and there's gonna be times where the market just isn't gonna give you what you're looking for, and that's okay. But just because you've probably faced some up and downs for a specific week, you probably took a few losses, right? It's very well possible that there might be a setup later on in this week that's going to clear your losses and then allow you to win. Or maybe this week you might have taken a couple losses, but then maybe next week you get to participate in some massive winners, right? So that's part of trading. There's going to be a random distribution of wins and losses. This just might be my distribution of the losses for the week, but that's okay. That doesn't mean that we've lost, right? We still going to continue on the journey, and I wanted to do this breakdown for you guys to show you guys the actual, both sides to it that some traders might not want to talk about, right? The side that they might not want to show, the losses, but this is all part of the journey. So that wraps up the video. If you enjoyed the video, oh, well, before we wrap this up, right, you see the executions, right? So took a short here, immediately stopped out on this bullish candle, then took another short here, right? Was not able to take partials at any of these levels that I marked, and then price took me out with this candle. So showing you the executions as well. So that wraps up the video. Enjoy the video, do leave a like and subscribe as we're on the road to a million subscriber, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.